Hi guys, this is Yao Kai at Investing with JYK. Today we'll discuss a Russian gold miner. The name is Polyus, something like that. Uh, I don't know how to pronounce Russian, uh, so um, for a gold miner, there are a couple of things that I think are important. One is cost of production. One is the size of the asset. The other one is obviously how much the company is being sold at. So I found this fantastic little website called goldminerpost.com. So we got this graph. This graph is, I'm going to make it slightly bigger. This graph is the correlation between enterprise value per ounce of gold and average ore value per ton. So what does this mean? So on this side, you got average ore value. Average ore value is computed just by the amount of gold that's present in the ore multiplied by the cost of the price of gold. So you can see that, for example, Barrick Gold, which is, I think, as far as I know, the gold company with the biggest market cap, has $58 in worth for each ton of gold. So 58 is divided by the gold price, which I think I have it somewhere. Actually, I don't. Gold price per gram. We got 43, so divided by 42.89. So they have about 1.35 grams of gold in the ground, and this is per gold equivalent, so that includes copper and whatnot. On the other side is enterprise value per ounce of gold. Now, enterprise value is the market cap minus cash plus debt. Essentially, it means if you were to buy the entire company, you would obviously pay at least the market cap, and then you have to you get to take all the cash for yourself because now you own the company, and then you have to pay all the debt. You take on all the debt that the company used to own, so that is is considered as like the true cost of ownership of that company, which is why it's known as the enterprise value. So for each ounce of gold that they own, you pay $147. And as you go down with average ore value per ton, the enterprise value per ounce goes down too. So, and very obviously, if your average ore value per ton is like really low, like $10, then essentially you're worth nothing because at that point the processing cost of each ton of ore, which is fixed or more or less fixed, is going to be more than the what you can get out of the ore in total, which means you're worth nothing. At that point, the enterprise value would be zero. So you would see that the enterprise value should go to zero before ore value goes to zero, which is why the line kind of goes something like that. Right, so it's probably like something like $20 ish, which makes sense. On average, at about to process each ton of ore is about $20 if you're doing an open pit mine. Um, so, and you can see that you have some kind of fairly linear relationship. This DGC company, Detour Gold Corporation, seems to be the outlier, being excessively expensive. I don't know what's special about them, but there they are. So I would not be buying that. Eldorado is, you can see, is slightly cheaper, so you got a lower enterprise value, but compared to say something like New Gold, but with comparable or even higher average ore value per ton. Right, so you got like 44 versus 41, but at the same time it's $56 per ounce versus like $108 per. So you get like half off. And the dollar has run into a bunch of issues. So there's definitely some kind of sentiment issue here. They had issue with like the Greeks and all that. Okay, so let's look at Polyus. So what do they have? They got something like 1.8 grams per ton. So that 42.89 is per gram times 1.8. So they are looking at $77 in ore value. So that looks fairly good. So this is 75. So they're somewhere here. Right, this is 91, so that they're like slightly above 75, so somewhere around here. And now we just need to compute the amount of um, gold they have. So first we have to figure out what are they quoting here, because in a mining company you got a couple of types of ownership, not types of ownership, but like different types of confidence in like whether you actually have that ore. So you got the proven, probable, which basically treated as like, you know, the good, the ones that you have like almost 100% confidence, and then you got the measured and indicated, and then you have the inferred. Measured and indicated is basically based on drilling. You can, you know, and some geology, you can kind of guess. Here is this vein of ore that I've hit, and then they span this size. And then for inferred, I don't actually know how they get it, but usually I just ignore the inferred part. And for Barrick Gold, they say they have 174 EV per ounce. So let's look at the Barrick Gold's EV. So if we go to Seeking Alpha and we go Barrick Gold, their enterprise value so slow. They got $25.18 billion. All right, so that's important. Now I found this fantastic thing, which is the Barrick Gold's gold mineral reserves and resources for on 2016, December 2016. The more up to date one, but they only produce about 5 million ounces or ish per year, so it doesn't change that drastically. So the proven and probable total, they got 85,950. This is a million ounce. Sorry, 1,000 ounces, right? So it's like 86. Let's take it 86. So we first convert this into millions, divided by 86. So that's clearly not right. That's almost 300. So that says it's $300 per ounce. That's what not this thing is saying. This thing is saying like 147. So what else do they have? They also got this measured in here. Measured and indicated, they have total 75. So if we try that, very similar. So that is 150 something. But so if we pay attention here, it says per ounce of gold equivalent. I think they're including this part. This copper thing, right? So copper is per pound. So let's just convert that copper per pound to gold per ounce. So we're looking at, I'm just going to put that here. Copper is, what they have is this number of pounds. So the copper price per pound. Yes. All right. So we're looking at something like here. Actually, maybe we should go to LME. That's a London Metal Exchange. They have like the most up-to-date price. Come on. Oh, here. Copper. What? The website went crazy. Or maybe it's my web. My internet is here, yeah. Holy crap, the London Metal Exchange actually, it actually died. What? Okay, well, we do whatever we can, find it here. All right, so copper price is about something like 3.1. Let's say 3.125 or something, but let's say 3.1, right? So this many, I think those were million tons. Oh, sorry, here, yeah. So those are million pounds. So 3.1 times 1 million. And that's how much it costs, divided by the gold per ounce is something like 1334. So those are million, but then you have to do million ounce divided by 1. All right, so they got another 13.76 million ounce. So here, if you just add that up, you end up with 144. Hooray! Mined up some part of it because, as we said, they actually, this is from a year ago, and they actually mined about 5 million ounces. Maybe let's just subtract a 5 here. Yeah, about that. So basically, we know that this includes measured, indicated, proven, and inferred that this thing has a 30 here. So if you add that 30, then it's all out of whack. So now we just need to find the measured and indicated for Polyus. All right, so Polyus, this one says PNP, proven probable 71. Let's see if we do measured and indicated. There we go. Measured and indicated, we got a here 92 plus 11. So 92 plus 11 plus 71, so that is their or number of million ounces that they own. And so this is million ounce. And now we need to find out their enterprise value. So Polyus. Oh yeah, one thing that we find here is that it doesn't really tell us the enterprise because most of them just don't have it. So we have to find it in the Russian exchange. This is your friend. So you got this guy. And let's find it in some more reasonable Google, because Google doesn't tell me either. I know because I checked. So maybe there's like a Wall Street Journal or something. There we go. Twice. Oh, damn it. Twice. Nope. About Wall Street Journal there. Come on. enterprise value count type. Oh, we have a guru focus. Not available. Oh, here we go. Enterprise value. Yay. Yeah, we got something here. Okay, so they got enterprise value to sales, but they don't have enterprise value. I don't want to compute it myself. I really don't want to compute that myself. I saw this somewhere. Oh well, I guess we have to do this in some stupid way. Price to sale. All right, let's compute the price to sale. Market cap. Go from market cap. We have a they should have let's see, annual. Nope. Sorry, this is supposed to be easier. Usually they just have, oh, market cap. Oh my god. All right, so let's do this. Market cap. From market cap, you can then compute the you can do like PS, price to sale. All right, so 3.82, that is the sale, and enterprise to sale times 4.79. That is your enterprise value, 760 point something. All right, so that's billions in Russian rubles. Let's just remove, well, let's do billion rubles to USD. Convert that to USD, we have this number, which seems to be like 13.6 billion dollars, right? So that's our total enterprise value. Now we just need to divide by the million ounces. And then just divide by a million. 78.31. So what is this? This is $78.31 of enterprise value per ounce. Okay? So let's just put that number down. EV per ounce. And at the same time, when we calculate, it was something like $77 ore value per ton, right? Maybe I'll make this bigger. Oh, this can't go any bigger. Oh, whoops. Yeah. All right, let's go back to this graph and take a look. 77, somewhere here. 78 is somewhere here, right? 78. So now you're here. Everybody's on this line. You are all the way here. So for the quality of asset they have, they should be definitely more expensive. Reasonably, they should move all the way down to here, which is 225. So if you multiply, you divide their EV by this number and multiply 225, so essentially 3x. So I think they're undervalued by 3x. Why is that? It's probably just because of Russia. And So here we have established its cheapness. Let's look at some other numbers. What do they have? They have these, well, obviously they boast about themselves. So let's take a look. All right, so all-in sustaining cost is excuse me, 572. So that's actually fairly cheap. Barrick is about 800, I think. And they pay a dividend. They started paying dividend starting 2016, so they changed their dividend paying policy. So they now pay a dividend, so that's pretty good. Average grade is actually fairly good. And then the other nice thing about them is they are, I think they're 100% open pit. Don't remember where that is. Yeah. Keep competitive advantages. So low cost is definitely one of their strengths. Oh. You can see their cash cost is really, really low. What this means is in a really bad market, the actual cash cost is less than $400 per ounce. So obviously this is not accounting for the depreciation of their ore body, right? But this just means that even at that price, like $400, they can still eke out a bit of cash to pay debts and whatnot, so they won't go bankrupt. So low cost for me is definitely something I want to see in a commodity business. Uh, sure, when the cycle turns, their change isn't as big as the high cost ones, but the low cost ones never go bankrupt, and I never want a company to go bankrupt on me. Oh, I can't actually find it, but trust me, I've seen this. These guys have 100% open pit, so they never need to actually drill a really deep hole into the ground and have like elevators to have people down there mining. They mine, as you see at the beginning, about like 2 million ounces a year. So they did, yeah, 2 million ounces last year. The life of mine is 37 years, which is longer than almost all other majors, I think, except one, I think. So yeah, so that's a suggestion. I think if you're into gold, I'm not saying you should be into gold, but if you're into gold, this seems like a good, cheap, large gold miner that has definitely has a very low cost of operation. So one thing you may want to watch out for is that the liquidity of their ADR is fairly limited. So if you look at this thing says it's $45, but if you look at where the price is actually established in Russia, because it's a Russian company, trade mostly in Russia, 4,560, and then their ADR is actually 2 to 1. So basically, two ADRs corresponds to a single share in Russia. Right, so I've actually done this. So this gets you 40.9, so $41, but the current price is 45. So be sure if you're buying it, use a limit order. Always go from the Russian exchange, find your price, and then put a limit order in. All right, that's all for today, and thanks for sticking around. And if you have any suggestions, you can either leave a comment to let me know what you want to see, and then the other way is I have a little Google form in my channel description that you can go to um, and request. I've seen there was a request for next gen energy, and I will do that. Thank you very much.